Hi, this is Paul from globaltradingsoftware.com, and this is a swing trading tutorial video, and for gold this time. So gold longer term plays are also a really advantageous trading strategy, and I want to look at 2022 so far. So it's the 8th of March 2022 I'm making this video. So I'm going to look at two trading opportunities to go long on gold, really, swing trading. I'm going to be using the automated harmonic pattern indicator, and I'm going to be using the Elliott Wave. So auto harmonics are traditionally, really for me, looking at potential trend reversals when there's been a harmonic pattern form and completing the automated completion zone, whereas Elliott Wave, the trend is already on its way and you're looking for pullbacks against those trends, measuring those pullbacks, and then getting in on that famous high probability move, the fifth wave move. So we're looking at those two situations right now. So I'm using the trading view version of the auto harmonics and the Elliott Wave, but it is available for other platforms. Please check out the links below and you'll be able to see them all there. So again, let's have a look. Let's go back to the beginning of 2022, and we're going to be looking at this harmonic pattern that completes first. So forget this this purple zone right now. We'll talk about that in a little while when it tests it again. But for now, you see at the end of December we have this butterfly pattern start to form, and then around the 7th of January we complete the D pivot there, but it also completes in the automated completion zone. This is very, very strong. So this auto completion zone is generated by the software, and it's the zone of best fit. So if that D pivot completes there, there's a good probability the resulting bullish trade. How do we know it's resulting bullish? Because everything's coloured in green. If it's coloured in red, you're looking for a bearish trade. But there's lots of complicated fib extensions and overlapping with fib retracements, but you don't need to worry about any of that because the software does it for you. And if that D pivot does go into this zone, then there's a good probability of that long trade really going for it. And again, so reach sensible entry above this B pivot here around about 1800 bucks, just over 1800 bucks. Again, that whole dollar mark as well, that 1800 bucks is good for an entry on gold at that point. Again, looking for that long. And then we have this move, and we use the manager to manage this trade. So we get this initial move up, tests that A and C pivot sort of level, pulls back, but it pulls back on lower volume. We have the cloud ribbon on the manager now, using to manage this is reasonably green. It's good, everything's good. We got a couple of high volume down candles, but this was a rejection candle at this point, so not getting too worried. And then the follow-up candles are all lower than average volume because those dots are there below. Starts to come back up again, and then we get two consecutive down candles with higher than average volume, and that's when we would take out that trade at that point, just to be safe, because we don't know how far it's going to go. So we went from 1800 to that would be $35. So that's a reasonably big trade by the end of January. So it's a decent swing. Then the price action comes back to test the same support as we got here with the D pivot. So really, that's providing us a good picture of the behaviour here. That this D pivot here actually was tested again. The zone of price between here and here was tested again. So this is good. And then the trade starts. The price action starts to move up again. We ignore this first pullback because it's only your one candle wonder, and it's a 4-hour time frame. We get a nice pullback here though into the amber zone on the Elliott Wave, and then it hits the fifth wave target zone and continues to go. And some people ask me, how do you trade that third wave? By being active, by noticing we get a wave pullback, trading that fifth wave, and when it pushes through that target zone, let it ride. Pulls back again on a wave 4, trade the fifth wave. Great looking trade. Now this is the major pullback against the trend. just recently, end of February, beginning of March, where we could really measure that. And you know, the wave 3, the wave 4 pulls back and finds support in this amber zone. But during that wave 4, the Elliott Wave Oscillator crowns, where you see the red here between 90 and 140. Stochastic crosses over the oversold zone there. False breakout dots on the top there in the stochastics. That denotes really strong bullish trend. So all the measurements are good. We've measured that wave 4 pullback. That amber zone represents an 80% probability it's going to go on and hit this 5th wave target zone, and it has done over the last couple of days. So we've hit target. So the entry for this after this wave 4 pullback, just above this pivot at 1923. Now we're at 2015, so you know, we're talking over $71 price move on gold. That's a lot of ticks, and again, that's how this swing trading works, and we can use the manager to manage this trade. We're still in green on this. If we wanted to go a little bit more aggressive on this now we've got to that 5th wave target zone, we want to be hanging on to quite a bit of profit here. So on the manager, we can go from swing trading to, say, day trading conservative. See where this is. Still looks good, but I think we could be a little bit more aggressive here. So with the manager, again, we can change this. Maybe let's go to day trading moderate. I like that. Again, simple. It's 4 candles in advance, the manager, the ribbon. So in this current candle, we're below the ribbon, and that's where our trade stop would be. They're still quite conservative. You can go more aggressive if you wish, but the main point of this is, by combining those auto harmonics and the Elliott wave, we've got 2 different types of strategies. Auto harmonics really did spot this trend reversal. It did come back to test that for a double bottom. So that was a good start. That was a $35 move. And we've got 10 ticks per dollar, so that's, you know, it's a good move. $350, 350 tick move there, and the manager helped us take out and maximize those profits. Then we went trending. Then we've had multiple opportunities to trade that 5th wave, to continue to go and manage that trade. You see how the green ribbon there just keeps green there, and you got about 3 opportunities to trade with the trend with the Elliott wave on gold during 2022, and 1 with that auto harmonics. So again, it does give you multiple trading opportunities for swing trading, and that could be gold, oil, indexes. It doesn't have to be stocks. Swing trading just isn't reserved for stocks. Also for forex, for futures, even for cryptocurrency. Using these simple indicators that take very complex trading strategies and visually represent them with some very simple rules, gives you those continual trading opportunities. So hopefully this helps. Don't forget, futures aren't just for day trading. They can be for swing trading as well.